Hello everyone and welcome back to the Vertex Investing channel. And I just want to say thank you to everyone who's liked and subscribed our videos in the past. And before I actually get anywhere and before I get through the breakdown that I'm going to do in this video, I was doing a psychology post the other day. And I realized that, I'm encouraging people to appreciate everything that they have and appreciate the position that they are in at the moment. And I realized that I didn't actually take a moment to appreciate what you guys have done for our community and for Vertex as a whole. Like, for example, our Telegram is sitting at 1,500 subscribers. Our YouTube's done 1,200 subscribers. And I never fully took a moment to say thank you to everyone who subscribed to our channels and showed us the support over the last year, especially in the last few weeks. That we've grown rapidly, and it's been a little bit crazy. But I realized that I never took a moment to say thank you. So thank you to subscribing to our channel, and I hope that the future content is worth it and worth watching. And also, I just want to say, receiving these messages, I get these messages pretty much daily now, and they're incredible to read. I wish I could share all of them. Well, I probably can, to be fair, but there's so many that I can show you. So in this video, I'm going to address this message I got to. I can't remember when I got this. Thursday, I think. I think it was Thursday. So this message was someone who took a euro pound short, and he hit 21R. And the reason why I want to cover this as well is because the approach that he took on it was a little bit different to what I've seen. With the discussions that I've had, it is a little bit different, and I'll explain why. I just think it's a crazy trade. Very nice, very smooth. There wasn't really any faults from my end, to be fair. Since when am I ever on the ideas page? I never look at this. There's some strange stuff on there. But anyway, let's get to my charts. So let's go to euro pound. Oh, I am already on it. Okay, so when
what the hell is even that?
What the heck is this? Guys, quick, take a screenshot, because this is the ultimate secret for the Vertex Investing. Why have I done a box? That's not what I wanted to do. Wait, this was the secret code. Quick.
FBI, open up!
Okay, it's gone. Right, so euro pound. Am I already on the data? Yeah, perfect. So euro pound, and he took a short. Now, what can we see already is we've created an impulse, right? And it's broken structure, right? Where's the structure break? Where's the most recent one? We've had a structure break here. Then we create a low, and then we had another structure break there. Okay, so this is the most recent structure break, and that's where the focus is going to be. Yes, price has a reason to come back somewhere up here, but we're not going to focus on that, because think about it on the daily, that's still a pretty, from here to there, it's still a pretty solid retracement. So price has good reason to react off here. If it breaks that high, then potentially it could be a change of structure. So think about it that way. Now, let me go to where I think potentially he was looking. So we broke structure, and all we need to do is mark out our order block, so we can see the order block is there. Now, if we use this order block as it is, it would have given us a what? Christ! It would have given you a 35 pip range, which obviously we don't want. That's a bit too big. Let's go here. Okay, so now this is within the daily order block, right? Now remember, we want to look for the most extreme point. Now this is where you probably get confused. You're probably thinking that this here is the order block that originated the move. It is in theory, yes, that is still classed as an order block, and it can be a point of interest where potentially you could see price changing in market structure, right? We could probably see a shift at this point. Now, if you think about it from the point is, let's play. Oh, Christ, sorry, I went too far. Let me go to here. Sorry. If you think about it from the perspective of thinking about the extreme points, because obviously we've got the range is from, here, right, to, the range is from there to here, right? So that's where the move originated from, and this is inside the daily order block. Now, from a retracement point of view, if you're thinking about it from here to here, right? Let me get the normal fib. Let me get to here. Yeah. So if you're thinking about it from a retail strategy perspective, yes, bear in mind we are still retail traders. Don't get it twisted. We are still retail traders. However, this is for example, this is supposedly a golden pocket, and this is where you would expect price to react to. And I don't know if I'm not going to try draw a trend line because I've never even used trend lines, to be fair. So I'm not even going to attempt it. But if you think about it from this point of view, this is pretty much a key point for retail strategy traders to look for trades. So with that being said, should you expect price to react to it? It could do. But ideally, I would prefer it if price was reacting to the most extreme point. Okay, so I want to refine this to the most extreme point to find the last possible reversal point for price, okay, in this point. So what I mean is I want to find the last possible place where price can react to, which is probably somewhere here. So remember in one of my videos where I said we're going to look at the last, probably the sorry, I'm getting my words tied up there. We're going to look for the last, like probably the edge, so about 25% of the range, right? So this is the range from here to here, right, of the daily. So I want to look for somewhere further up. I don't want to look at this point. And by doing this, you are prone to missing more trades. So just bear that in mind. But when you do get the right trades, you know that you pretty much got the exact point. You've got the precision there. So just bear that in mind. For me personally, I don't mind missing trades. As a trader, you have to bear in mind, preserving your capital is your number one goal. So just bear that in mind. But anyway, let's go through the time frames and let's see what we find. So what I would generally do is I would go straight to the 1 minute or the 30-second and try find an OB at the extreme point. So when you're doing this from here, you basically look for an OB that's not been mitigated. Now here, if we're looking at the most extreme point, everything sort of seems to be mitigated, and this is the conversation I had with him. So I'm explaining his thought process, not my own thought process. Everything has pretty much been mitigated, and you're sort of trying to think, where can price go from? And he wasn't feeling confident in any of the order blocks that are sitting here, right? Because for me, potentially that one, but I don't know if there's anything up here that's, it's nothing's really standing out for me. Now, if let's go here. So let's go through the time frames and see what we find. So again, same thing. Nothing's really clear. Price is very clumped together, and nothing's really telling me, where should I be looking, right? So let's go through the time frames again. So in the 3 minutes, again, I don't really see anything overly clear for me personally, and even this is what he said as well. I think he mentioned on the 5 minute or the 4 minute there was something. Yeah, it was this one. So he highlighted this one, but he felt like because there was a huge impulse from here which broke structure, he thought that there is still something sitting within here, and if he took a trade off here, he knows he'll potentially get stopped out. So the trade that he was actually looking for is actually going for just placing a order and placing it as a set and forget method. So he'll find the most extreme point of that range and place his order and then let it go, whatever it does. And to be fair, as a mechanical trader, I back that. I personally don't use a strategy in this way. For me, I just think it's higher risk. The win rate isn't overly great, but it is a more relaxing way. And because we know that we have a statistical edge, taking a few losses is fine, purely because of the risk to reward that we can have. And to understand that in more detail, make sure you watch the last, but I think not the last video, the video before that, the video that I did, not the video that Ben did. That will show you an example of a journal. So he went to the 15 minute, and this is where he finally saw a clean OB, right? So he's obviously, for me, yes, that is a clean OB, but some people don't like the fact that there's barely any body, there's more wick than body. But that, for us, you have to understand what is going on in that candle. Within a 15-minute candle, there's loads of other candles on different time frames, and when you get a huge wick like this, I don't even know the names of the candles, to be honest. I don't bother to learn, purely because you need to understand what's actually happening inside a candle. Once you understand that, knowing what to call a wick is not a wick. Knowing what to call a candle is not really relevant, to be fair. As long as you understand the price action that's happening inside. So, generally, when you get a huge wick like this, you know that the sellers are taking control. What does that mean? The sellers are in control here at this point, right? So that if you think about it that way, there's potentially an order block sitting within this. Okay, so this is an order block for me, and what he did is, because this range is fairly big, well, from what he said, to be fair, it's a 4-pip range. So placing a trade from the bottom, from the open, I don't see any issue with that. It depends on how you want to do it. But he took the 50%. So he took the trade from. Oh no, let me get rid of this retail. Which one is my main one? This one. I don't know why I labeled that as M. Don't question. So this is my fib, and he entered on the 50%. Let's go to here, 50%, and the stop loss was above. And this is why I want to discuss this trade, because the thought process behind it is something that I think a lot of people get a little bit confused about. Not confused, but get a little bit, their judgment gets very clouded. So if you don't see anything clear, and oh god, sorry, okay, we obviously know it reacts, but if the price action isn't clear, and if the setup isn't clear, if your order block is not clear, should you take the trade? No, don't force one. Okay, if you can't see anything that's matching your rules, don't force a trade. That's why in Vertex, that's why we trade fully based on rules, to get rid of the whole guesswork situation that comes with trading. If we have a set criteria that when you only take a trade when you have those two rules, okay, if those two rules are present, then take the trade. If they're not, then you don't take the trade. For him, his main rule was to find an order block that was clear. Okay, he wants a clear order block at the most extreme level. As you saw from the 1 minute and the 2 minute and so on, there wasn't anything overly clear that was sticking out at the extreme point. Okay, the only one was the 15-minute, and that 15-minute range for him was quite big. To be honest, it was fine. But it's obviously down to the individual. For me, a 5-pip range is my max, so that would have been fine. He placed his stop loss as 4 pips to account for spread. So it was here. So the main reason why he did the 50% was purely because he knows that he needs to account for spread, and he doesn't want to sacrifice that risk to reward. Now, in theory, he did sacrifice risk to reward to get this sort of entry, because he could have refined it to like 30-second or something in there if he wanted to. I don't know if he had premium trading view or not. That's a sneaky flex there. But you can over refine it, but he found a risk to reward that he was happy with, and he stuck with it. And that's the main way to see it. Don't get too greedy. Don't aim for 1-to-100s straight away. Don't aim for like these huge trades from the get-go, because if you do that, like for example, let me just let this trade play out. So say for example, right, you're aiming for a 1-to-100, okay, and then this trade hits a 1-to-21.7, okay, this is not going to impress you, because you're aiming for that 1-to-100, you're aiming for that 1-to-50, you're aiming for that 1-to-200 or whatever. This win won't impress you, and that's the problem. Okay, don't get too greedy. Okay, imagine doing this consistently. Being able to do this consistently week in, week out is crazy. You think about the compound gain. You don't need huge trades. Okay, you don't need to have a 1-to-100 or 1-to-50 plus every single week. Okay, if you can hit 1-to-10, 1-to-10, 1-to-20 consistently every week, think about the compound gain even on a small account. I would do the math for you, but I don't know if you realised from the previous videos, I actually can't do maths very well. I'm terrible. But, be realistic with your targets. Understand your ranges. He went from the extreme points of the range. Sorry, I'm struggling to get my words out there. He went from the extreme points of the range, went from the high to the low. Simple, target was set, and set and forget. It was a perfect trade, and I can't fault that at all. yeah, that's just crazy. Like the fact that you can do that as a set and forget method. I don't know when he placed the trade, but say you placed it once structure broke, so you placed it around here. Yes, you'll be waiting what? You'll be waiting a day or so for price to trigger. But then imagine waiting a day and then for the price to hit your target in 4 days of 21R. So depending on what percentage you trade with, it doesn't matter if it was 21% using 1% risk. It's still crazy. So what I'm trying to say in this video is obviously this is a crazy trade and the refinement was really good. I can't fault that. All I'm trying to say is don't get too greedy and try not to focus too much on the big trades, because I know in the SMC world of trading, showing these 1 to 100s, 1 to 200s is, overly impressive. But if you think about it, realistically, how many of those trades are actually 1 to 100? People are taking partials. Unless you've got balls of steel, people are taking partials. So they're not really hitting 1 to 100s if you think about it. Whether they are or not, I'm not going to call anyone out because I don't really know. But, I'm just saying, like from personal experience, I'm not going to hold for 1 to 100. Realistically, I mean the one big trade that I had on Kiwi dollar, is it Kiwi dollar? Yeah, Kiwi dollar. I had a huge trade and I held the full position. But the only reason I held the full position is because I was trailing my stop loss below the lows, so I held the full position. Normally I would take partials, like my pound yen trade that I took last week, which was the overall move was 128R. Is the one that I don't know where this one. So the overall move was something like 128R, but I closed partials. I think I said it somewhere here. Yeah. So I closed partials. So overall it was about an 80R trade. So like don't be fooled by seeing like the big risk to rewards, because people are taking partials. It's very easy to place a trade and leave like a very small percentage and then claim that's our 1 to 100, right? And again, I'm not trying to cause anything, but I don't want you guys to be fooled, and I don't want you guys thinking, you have to hit 1 to 100 straight away. Okay, so I realize I'm waffling quite a lot in this video, but I hope what I'm saying is making sense, and I hope what I'm saying is going to help your psychology when it comes to trading. It's fine to take 1 to 10s consistently. It's fine to take 1 to 20s consistently. You don't need to have the big trades to be successful when it comes to trading. So just be calm. Okay, accept your wins, because this win, if you're aiming for 1 to 100, this win will mean nothing to you. But in reality, this is a huge win. Even like for me, I would be more than happy to take that win and I'll be done for the week. I won't need to trade anymore for that week, even that month even. And that's when it comes to, what you see as financial freedom and what capital you're trading with. To be fair, like for example, if I was to trade that and I took this one trade, I'll be happy, I'll be done for the month even. And it just depends on how you perceive money, how you value it, and how you value your trading, because the main thing you want to that you want to trade safe. You don't want to be trading with ego. Throw the ego out. Just focus on securing capital, basically. Okay. So to summarize, don't be greedy. Okay. Don't try being a hero. Just go for a safe trade. I'd rather have a safer trade than a failed one. Okay. But I'm going to end the video there. I realised I did waffle a fair amount, so I do apologise for that. But I hope you enjoyed the video, and I'll be back in a few days with another breakdown. I think I'm going to do a breakdown of the message that I received following this. The one here. Which one is this? What is it? Euro, pound. Yeah, I'll save that for another video. More content for you guys. But again, I just want to say thank you again for subscribing and liking our videos. Make sure you like and subscribe this video if you like the video. Don't feel you have to. Also, thank you for messaging us with your results. It does mean a lot, and we do try and reply. I think I've replied to pretty much everyone that messages me, to be fair. Just bear with me on the replies, but I do reply to pretty much everyone. Yeah, it's really humbling to read, and yeah, keep them coming. It's really great to see that you guys are thriving off the free content, and hopefully we see you in the community. And I just want to say our bootcamp is open for February, and we still have the £500 discount code. The code is YT500. I'll put it somewhere. I'll try edit this in. I'll put it somewhere on the screen if you want to join the February bootcamp. If you don't want to join the bootcamp and you just want to join the community and you want to join the Discord and the course, because the course is all here. If you want to join this, you can join via the trade membership and you'll have access to everything here. You'll have access to our bi-weekly webinars that you can ask us questions live, and we are active throughout. The Discord, and yeah, we're active throughout the Discord, and you can ask us any questions anytime. And yeah, so hopefully I will see you guys in the community soon, but if not, enjoy the free content, and yeah, feel free to drop us your results, let us know how you're getting on. But for now, take care and trade safe.